What is up, traders? What's up, tycoons? Super excited for today's video. Let's break down SEI. Now, is this the top right here? Are we about to crash and drop 50%? Well, we'll go over that in today's video, but there's a lot of support, all right? What we're seeing is literally called a retracement. It's a healthy pullback. And guess where we're at? We're at the first major retracement level right here. So we'll see if this will be support. We'll go down over all the key levels. But even if we were to drop a little bit more from here, there's a lot of support coming up very, very soon. We're going to break down what those are. Now, there are some risks associated as always, and one of them is that this could be a bump and run reversal. So we'll break down what the bump and run reversal is, but we'll go over the key areas of support that could just completely negate and get rid of the bump and run reversal and really lead to further upside. We'll go over the bullish price targets that we have as well. But as always, the content provided on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So be sure to read through the disclaimer. If you're new to the channel, I actually started a completely free newsletter for you guys called Investment Intelligence, giving out free trade ideas, free valuable finance and trading content every single week. Right? If you go and take a look back at some of the recent newsletters, you'll see that many of those trade ideas have worked out very, very well. Okay. Even the most recent one, RTX, we have people, hitting me up in the Discord saying, hey, my January call options are up 88%. They actually went up well over 100% on those. So if you want access to the Discord, all right, it's actually only $1 right now. Okay. You can get access to the dollar or get access to the Discord for just $1 using promo code JAN24. All right. We're doing that to kick off the new year, kick off, 2024 with a bang. And so trying to just let as many people as possible get in for just $1. After that, it goes up to $10 a month. But, that's less than a cup of coffee per week, right? Now let's get into it. And, we see the signs of a potential bump and run, right? Here's our prevailing uptrend. And then we have this aggressive bump up in the price, right? And if we look at the bump and run reversal, that's what you see. You have the leading uptrend, and then you have the aggressive bump, and the run is a run all the way back down to where the pattern began. So, that's what you want to be cautious of, right? That's the warning sign, okay? But if we start finding support, all right, and as I mentioned, we're approaching support right now, right? 118 and 185 are going to be the next overhead bullish price targets. You can see we hit the first one and we started forming doji candles exactly as soon as we hit this first bullish price target here, which is 0.7678. So for now, that will be resistance, okay? That's an area where you want to look out for potential double tops, right? If we come up here, reject again, and then break through, like the neckline of the double top, you could see some type of move down to, 0.4759, for instance, okay? So, as I mentioned, here's resistance right here, and then the next two bullish price targets are up above. Now, what we need to discuss is going to be support. Okay, so we have our 38.2 right here, our 50%, and our 61.8% Fibonacci retracement levels. Now, these are the three most common and well-respected Fibonacci retracement levels. And we use these because nothing moves in a straight line up and nothing moves in a straight line down. So you want to identify if something is in trend continuation or in trend reversal, right? So you use these to identify if we're moving up, pulling back, getting healthy retracement, and continuing the trend. Or if you flip the 61.8% level to resistance from support, so 0.4759, if we were to move up, come down here, consolidate, and ultimately break through these levels, that's when you could look at a potential reversal, right? That would take us back down to the 0.26, 0.25 area, okay? But as long as we are above these levels, that's bullish. Okay, so above 0.47459, that is what we would call higher low territory, right? You can see we have a low, right? We have a high, and then we have a higher high and a higher low, and a higher high and a higher low. We have a higher high, and now it would make a lot of sense for us to get higher low. Okay, now even if we were to break through 0.4759, we do have this initial trend line here as well that will act as a support level potentially to send us higher. Right. We talked about the risk with the bump and run. Okay. So, if we do break through the second trend line, then there is a strong chance that this will be a bump and run, and we'll be looking for a total reversal from where the leading trend started, which would, be a pretty big drop from right here. But there's a lot of work that needs to be done. Now, on top of our Fibonacci support levels, these purple lines here, all right, here and here, these are what's known as anchored VWAPs. Okay, the VWAP is the volume weighted average price, and you can anchor them to specific dates, specific price levels, right? And so what we did was we anchored one to the high. Okay, so we have our most recent highs right here, and you can see we're trading below it, right? As soon as we lost it as support, the next day it tried to act as support. We've started flushing to the downside. Well, if we anchor a VWAP to the most recent low, which is going to be right over here, you can see that it's lining up very nicely with our 50% retracement level, which is 0.5549. Now, if we anchor a VWAP to the previous low, right? So we talked about these higher lows, right? We have a low, we have a higher low. So we anchored one to this low, and if we anchor another one to our most the low before that, you can see that that one also aligns very well with the 61.8% retracement level. Now, if we are above here, this means that the average buyer, okay, is green, right? The average volume weighted price is up on the position, all right? And these are areas where institutions, typically buy and sell at, right? And these are areas where there's going to be a lot of support. Okay, being that we're trading above them, we're going to look to see if we were to continue heading lower, will we be able to find support along these, which is also going to be our Fibonacci retracement levels. So we have lots of factors, lots of different support levels from multiple different technical analysis aspects coming up. So pay close attention over the coming days and weeks to these levels. All right. Do we find support at them? Do we bounce? If we break our most recent highs, we know our next bullish price target is 118, and we know above there it's going to be 1.85. Right. The RSI has been overbought for a very long time, and we're finally starting to see it cool off here, get below that red line, which is, overbought. And so being that we are below the red line here, that's healthy. And now, there's room for this to start running again, all right, and go back into that overbought territory, right? A general rule of thumb is typically not to buy something when it's overbought, okay? It doesn't mean that, something can't go higher, but as it's more of just like a general rule of thumb is you're not necessarily trying to FOMO into something as it's, overbought, as they say. All right. So that's pretty much it for today's video. Don't forget to sign up for the newsletter. It's completely free. You can get those trade ideas to your inbox every single week. All right. And you can also join the Discord where you get access to all the different analysis, all the different trade ideas, and valuable resources inside of the Discord for just $1 using promo code JAN24 to celebrate the new year and celebrate 2024.